Hi everyone, this is Rob Roy of Elliott Wave Options, and welcome to TradeFinder Live. Hope everybody had a good holiday weekend. And if you're new with us this week for TradeFinder, welcome. The way this works is we go through, first of all, this disclosure / disclaimer that we're required to do. If you've seen any of our videos, you know that this is part of the process. It is important, so if this is the first time seeing it, please take a screenshot of it and read it in detail in your leisure. A couple primary things that the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international subscribers, a lot of international viewers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. So those are the big things. And again, please take a screenshot and read this in detail in your leisure. The way TradeFinder works, we'll go through a brief market update and certainly things to talk about with the movement in the market. We'll go through any recent closed trade alerts or open trade alerts, initiated trade alerts within our alert service, give you an idea of how that works. It's going to be a little bit interesting tonight because we actually sent out an alert that we talked about in a previous session. So with that, we'll go through and then we'll look at our past case study considerations, give you an update on how those are performing, and then we'll look for any case study considerations for tonight. If you've been watching these videos for a while, you know that our record is pretty phenomenal on our case study considerations that we've done within TradeFinder. And then at the end, we'll take general Q&A, which usually amounts to you guys telling us what your favorite stock symbols are. And again, we can't give you individual investment advice, but we'll let you know what our indicators say about your favorite stock symbols. So that's pretty much it. That's how TradeFinder works. So with that said, let's go ahead and move into starting with the market. A couple things to note. We broke out finally. And you can see we're up to 139% extension. If you've been affiliated with anything that we've done, you know that we're talking a 420 level on the SP we have for quite a while. And that goes way back. I stopped showing this for a while because we'd shown it for so many months that I figured people had seen it by heart. But we'll go ahead and review it now. You can see that up here is where the price target has been. And so we're looking for that 420 level, which looks like not too far away with the move to the upside. Now, one of the things that a little bit concerning is this gap. Not that it's really a concern. It's just the fact that I don't like gaps because gaps get filled. The question is going to be, especially with the fact that we had this gap up, we have separation between where the market is and the 10-day moving average, and we have a doji today. Are we going to get a little pullback? It would make sense actually to pull back, come fill that gap right there, right around 400, which is a primary number. You hear me talk about that all the time. I use the Star Trek analogy of the tractor beam effect of pulling towards those whole round numbers, the big numbers. So to see the market pull back a bit, come test that level at 400, close the gap with a 10-day moving average would not be concerning at all. In fact, it would be healthy as far as the rest of the continued move. Now, could the market go from here and just hit 420 first before pulling back? That's a pretty good scenario as well, because I'm looking for a potential corrective move once we hit 420, because that's the 161.8% extension level. So getting there, it's rare that we go to 261.8. It's not unheard of. It happens, but that's more rare. So it would actually set up more for a great downside trade if we went right to 420 now and then we're really overextended and came back. That would be a fantastic downside trade. But the market, as I've mentioned numerous times in the past, doesn't always set up beautifully for us or give us exactly what we want. In fact, it rarely gives us exactly what we want. It's difficult, it's challenging. That's why this is such a tough business, this world of trading. But the fact that we are separated, we do have a gap, those are all concerning things as far as the market continuing to the upside. But like I said, if we were to go from here to 420, it would be back to truck up on downside trades. We would have nothing but downside trades in that scenario. But we may not get that opportunity. Perhaps we come back down, test at least this high, let the 10-day moving average catch up, close that gap, etc. Next few days will tell us. The futures are up 4.5 points right now, so that's not telling us a whole lot. Pretty quiet at this point in time. But those are the scenarios with the market. But we did break out. We've talked a number of different signals that we could move down from here. But as I said, the ideal scenario would be let's just rally on to 420 and set up a great, fantastic downside trade. But the market's going to do what the market's going to do, and we'll see what happens from here. Often we get people that ask, how about the weekly chart? So let's go ahead and take a look at the weekly chart. And as you can see, we have a gap there as well. And that's the reason I wanted to show you this is a little bit of a gap in the weekly chart. And look, that's kind of rare. When you go back and look at all this going back time. Where's the last time you saw a gap on the weekly chart? They just aren't there, right? So that gives you another thought, I guess would be the appropriate thing, that it's likely that gap gets closed before the week's end. So it's just Tuesday. Likely we don't rally on and move to the upside from here with the fact that there's just a lack of gaps on the weekly chart. So that lends us to feel like, well, it's pretty likely that we will have a pullback at some point this week and fill that gap. So my thesis remains the same. Those are the thought processes. If we run straight to 420, then man, we really load up to the downside. But from here, the likelihood is that we have a bit of a pullback, and that could happen as early as tomorrow, especially with the doji scenario that we have today. Those of you that are candlestick charting fans know what we're talking about. So general terms, that's where the market is, but we did break to new highs, and the march to 420 looks intact. Just, do we go straight there? Do we pull back first? That's really the question is. That's the bottom line. All right, going to look at some of our past case study considerations, going back to WERN. We looked at this. This is back from March 2nd, and you can see there was our target price at 48 at that point in time. And so here's where we are today. Boom. So we've gone through it. So what we're going to do is we're going to close that one off. We're not going to look at that one anymore. If you had followed along with that one, it was time to take profits. Hopefully you did. You realized your profits in that one because you hit our price target. And when you set up a position and it hits your price target, it's all you can ask. So once it gets there, regardless of whether it's a 10% gain, 100% gain, whatever profit is, if it hits your target, you can't expect anything more from that. So go ahead and take the profit and move on. So we're closing that one out. We won't be showing that one anymore. And then the next week we looked at Royal Gold. So that was on the 9th of March, and you're just waiting for gold to do something, right? And so this was a strangle. We don't care whether it breaks to the upside or the downside. Closed at 106 back on the 9th, and we're up at 111. Is gold finally moving? Is that finally starting to happen? Well, it looks like, at least at this point in time, our GLD is starting to break to the upside. So that looks good. And we'll continue to watch and see if this one continues to the upside. Next, looking at 316 with AOS. So we looked at that one on the 16th of March, and boom, there we go. To the upside. So we closed at 68.90. We were back at 65.63. So up $3 and roughly $3.50 on AOS. Pulled back a bit and then rallied back to the upside today. Again, if you're not affiliated with the alert service, you have to make those determinations on when to exit on your own. So you decide whether or not you would okay with the profit that you realized back on the 29th when we hit 70, or if you're waiting for further movement to the upside. We also had PSA on that day, public storage. And so you can see 255 was the target there, and There we are, 255. So we're crossing that one off too. So that one's done. Again, hitting his profit target. Look at that move. Hopefully you follow along with that one, because check that out. Pretty vertical move. And then you can say, well, it's only a 92% extension. Couldn't it go to 100? It could, but it hit our price target. It hit the price target dead on. So, I mean, that's, you don't ask for more than that. Boom, hit the price target right at 255, take it off, take the profit, move on. So there's another one that we're closing off that hit our profit. Last week, we closed off SFM that we had initiated on the 23rd. So there's 3 within the past few weeks. We also did, on the 23rd, we did DraftKings, which was a strangle. So similar to Royal Gold, we did a strangle on DraftKings. The 23rd, you can see we had consolidation right there at 70 and moved to the downside, and we've crawled back a little bit. So right at 70 down to 60 may or may not been enough of a gain for you. Probably could have looked for maybe a little bit more movement out of the 10 points. So if you didn't take the position off, I could understand that. So let's kind of look at this and see what would we do from here. We did break the 50-day moving average, but with no confirmation. You know that when we break a major moving average, major support resistance, break out of a triangle, you've heard me say it numerous times, you have to have a second day, a follow-through or confirmation day. Well, we broke through the 50-day moving average, but with no confirmation. The next day we went right back up to it. And now we've broken above it, and we've closed right where the 10 and 30-day are both the same spot. So it looks like maybe there's a little more consolidation here, and then we move again. So could we break to the downside further? Could we break to the upside? We talked about the fundamentals last week of, all right, so we're done with the Super Bowl. March Madness is now over with. Where are the big drivers as far as fantasy, placing bets? The big events are pretty much over with. So you could see a scenario where perhaps DraftKings falls further from here. See if the DMI gives us any sort of a indication here. Not really. The ADX was moving to the upside on this downward move, but then it kind of turned and went lower. But if you haven't closed this one out on the downside move, perhaps you wait a little bit longer and see if this is just a bounce back to test the 10-day moving average, and then we turn and fall further from here. Again, you could make a fundamental case from that. The technicals are just showing that, hey, we broke down, we've recovered a little bit of a bounce. We probably have a qualified zigzag at this point, I would imagine. Yeah, we do, at 40%. So the 100% move to the downside would be just below 50 at around 48. That's a possibility as well. But we'll continue to monitor this one, assuming that maybe you hadn't taken your gains at this point. This is where it gets interesting. Okay, we also looked on the 23rd at Google, and we talked about how this would be a strangle, and perhaps it would be in our high value portfolio because it's so expensive. Well, we didn't do this in our high value portfolio as a strangle because it was just really, really expensive. But when you look at what happened since then, watch this. Boom. There you go. That's why we look at triangles. There's your breakout. Look at that vertical move breakout in Google. So taking a look at this from our website, we did send out a trade alert to our subscribers on Google, but not as a strangle. It is in our high value portfolio, but we sent it out as an out of the money butterfly, one of our favorite positions that we haven't been able to send out for a bit of time because the VIX has been too high. Now we have the VIX back down below 20, and that is a more favorable environment for the out of the money butterfly for a number of reasons. One, when volatility is higher, the butterfly doesn't work as well. It's more of a low volatility strategy. In addition to that, time decay in an out of the money butterfly becomes your friend. It's initially neutral, and then it moves towards being your friend the closer you get towards expiration. So it's one of those ways where we can take that big old enemy, which is time decay, theta decay, and turn it in our favor. But if you have high volatility and the stock price gets there too soon, it defeats the purpose a bit. You could have probably made more with a straight call or a call vertical debit spread than an out-of-the-money butterfly, although the out-of-the-money butterfly has the aspect of a very small potential debit with a larger potential gain. So even though the debit here was 695, so that's a little larger than normal for an out-of-the-money butterfly, but check out the spread, 2,400, the midpoint 2,500, the outside edge 2,600. So when we take a look at this and we have it on our graph, and that's included in every one of the alerts, so you're seeing this is the exact alert that is sent out to our subscribers on what to do. And so you take a look at the chart, there's where we were when we sent it out. So we have a confirmed breakout from the triangle. Remember, I just told you, you need the second day, follow through a confirmation day. So there was the breakout day, then the confirmation day, and there's our target range. Check that out. If we can get the stock to move somewhere within that range, then we can generate a very nice gain. If Google continues higher but doesn't reach that gain, the target range, we still can make a nice gain. That's the beauty of the out-of-the-money butterfly. It's directional in nature. So just getting the direction right can generate a gain. However, if you can get the stock to move in within your target range, you make more. And the closer to expiration the stock moves within that target range, the higher the gain becomes. So there's several different levels of how you can make money, whether it's just a small gain, a decent gain, or a really good gain out of an out-of-the-money butterfly. I mean, that's really the gist of it. There's 3 different target ranges for profit. Now, looking at this, and I wanted to spend a moment on this, you see, all right, we had the big breakout, and look where the 10-day moving average is. So our subscribers would be like, what are you doing? You always talk about how when you get too far away from the 10-day moving average, say it with me, no security in any time frame gets very far away from the 10-day moving average. How many thousands of times have you heard me say that? Why would you go ahead and put this position on now when you're already separated from the 10-day moving average? Good question. Couple of different reasons. For one, the stock actually moved up another $20 from the time we put the butterfly on. So this is where it was at the close, but it wasn't that high when we put the position on. It closed up $89. It was up about $64 at the point, so $25 it moved to the upside after we put it on. In addition to that, it's okay if the stock pulls back down, which it did today. Google was down $9 today. We'll go ahead and take a look at the current chart here in a second. Because remember, time is helping us now. Time is not the enemy. So if we pull back down, get closer to the 10-day moving average, and then continue to move to the upside, all those days that are ticking by where normally we're like, we don't want that. We want to wait, let it come down to the 10-day moving average, and then we move in so that we don't lose those days of time value. Well, now those days are helping us. So if Google pulls back, if it goes sideways, if it allows the 10-day moving average to catch up from either a pullback or a move sideways, those are days that are helping us from a time decay standpoint. So it's a completely different mindset with the out-of-the-money butterfly versus buying straight calls, etc. So we pulled back a little bit today. If we do that for another couple days, great. That's helping us in the end. That's helping us to put more time between now and when Google is likely to move within that range. And the last piece of this is if Google hits the midpoint of that range, anywhere near expiration, which this is May position. So let's say we have a month, a little over a month for it to move to the upside there and hit the midpoint. That's where it becomes not just a great trade, but potentially a grand slam trade. Super excited to have another position on Google. You've likely heard me say that Google's #1 as far as my 25 years of trading with, well, I've been trading Elliott Wave for 20 years. So it's been #1 as far as Elliott Wave patterns over my Elliott Wave trading career. There's really no other stock that's even come close. Other ones that are real liquid. Apple, a few others have shown up numerous times, but Google's by far the leader. And Google, by the way, with an out of the money butterfly, has realized this exact same setup here. A Google out of the money butterfly is the trade that generated the greatest number of profit I've ever had in a single trade. So at some point in time, maybe we do that again. But that was a time when it was a way out of the money butterfly, was Google's moving up. The earnings report came and moved a ton the day before expiration, hit the midpoint of the butterfly. It was a better than 1,000% gain. 1,000%. I'm not exaggerating, not 100%, 1,000% gain. That'll make your year when that happens. So not saying that's going to happen now, not saying that at all, just saying that the setup was similar, and we'll see how this one plays out. But that's the setup on Google. So I wanted to share that with you because we did have this as a case study consideration as a strangle, but we sent it out again as the butterfly, the out of the money butterfly, to our subscribers. So when you look at this, you can see, okay, we pull back down, but look at the doji. It's like, are we going to turn and head back to the upside tomorrow? Or is the doji going to say like, well, we're not sure where we're going to go. We still haven't fully closed that gap with the 10-day moving average. So I'd be fine if Google decided, let's pull back just a little bit further and allow that 10-day moving average to catch up. That would be fine as well. But again, if we had waited and let that stock come back to the 10-day moving average, then set the butterfly up, we're not capturing those days of time decay. So that was the main educational thing that I wanted to share with you, is the beauty of the out of the money butterfly, allowing time decay to go from an enemy to neutral to friendship. Pretty interesting scenario there. And with the market breaking out now, so the market's moving to the upside. We do want to see what happens with this doji today if we get a bit of a pullback to close that 10-day moving average. But if you've been considering becoming a subscriber and you haven't yet, we're breaking out. We're going to hit our target. Everything is looking great. The VIX is down. Now we can put on more of those out of money butterflies. This is a really good time to consider becoming a subscriber if you haven't done so thus far. All right, now let's move to last week, and we looked at a couple of our momentum searches. There's more to look at tonight. I haven't looked at them yet. As I said, I always wait and go through them with you so that you can hear the thought process. That's one of my things, is that I don't set charts up ahead of time. We don't back test. We don't do Monday morning quarterbacking. We look at everything live every single week. That's why this is called TradeFinder Live. Everything we do is live. So you hear the thought process. You can follow along with them. Hopefully you're taking notes, and same thing I'm doing, writing these down and following along with them. And see, we like to say that we walk the walk and talk the talk. So we do what we say we're going to do here. So here was BAK last week. That's where we were. It was a nice breakout move there on the wave 3. Closed at 1409. Boom. Look at that. Straight up since that 1507 now. So people have wondered, why did you set up the momentum scan? There you go. That's why. And so then we also had last week, we had CBD, Campagne. It's a Brasilia thing. There are Campagne. I think that stands for company or something. I'm not sure. I'm not very good in Spanish dialects. But moving to the upside here, you can see it was a bit overbought at that point in time. And here's where we are now. Allowed that 10-day moving average to close, but basically it's hung in there. So it's gone sideways, let the 10-day moving average catch up. Maybe from here, it continues to move back to the upside as expected. But BAK just took off from where we looked at it last week. So pretty interesting, I thought, tonight with a kind of a different slant on the Google case study consideration from 2 weeks ago. All right, so now what we want to do is go through and take a look at our potential searches for a case study consideration for tonight. And then with whatever time is left over, we'll go ahead and take your questions. I can see that there's several of them over there already. Looking at scanners, open pre-computed scans for those of you that are new. And this is a software program called Profit Source. It's from a company called Hub, HUBB.com. And we have a relationship with the Hub Corporation, and they have embedded within their software some of the searches that are utilized within Elliott Wave options. So when you see these EWO searches, those are mine. Those are my searches for finding stocks, and you can see our record on our website, ewotrader.com. Since the inception of Elliott Wave options back in 2017, everything, single trade is on there. We're fully transparent. We post everything, as you just saw with the Google position. We even have mark-to-market graphs, which show where every position is every single day. So we're coming out of a period that's been really challenging in the market. The exciting thing about that is you get one of those a year on average. So normally you have one sideways period a year, and it's been a little over 2 months. That's pretty much the average when you get the sideways move. So the fact that we've been through that means we're likely to have a period of a number of months of directional movement, whether it's up or down. It could be up, then down. And that's fine too, as long as the market's moving in a directional manner. We're in great shape. So from that standpoint, really good time to be looking at new potential alerts. But those EWO scans are my individual scans. And then there's a couple other things they put in here for us that we look at a lot. When the ADX, because the DMI is a favorite indicator, the bullish wave 3, bearish wave 3 searches, and then the directional indicators, which tie in with the ADX from the DMI. So you can see here, there's the momentum scan. That's where we found the two from last week, BAK and CBD. There's 8 of them. So we'll look at those as well. But before we do that, here's the bullish impulse stocks. We can click there. So there's the 3 right there. We'll look at those as well. But I always like to click, are any of those in a bullish wave 3? So why are we only looking at bullish? Because right now, the market's going up, and the majority of stocks move with the market. So there's 2. 2 of them are within wave 3, so they eliminated 1. He tried to say. So we look at Stanley Black & Decker. Boy, that looks good. If you've heard me in past events, you know I really like that 45-degree angle. So let's close all this other stuff off of here and just look at the chart. And you can see that the price target is 215. That looks pretty good. ADX looks good. ADX is rising. It's only at 25, so it's got a ways to go. Boy, that's going to be tough to beat as a case study consideration for this week. So I'm going to go ahead and already make a note of this. I'm not going to say it's official yet, so don't write it down yet. But so for the 6th of April, SWK looks pretty interesting. So we're trading at 203. We have a target of 215. So let's go back and look at Burlington, which is a retailer. As you know, they used to be more limited. Oh man, that looks like a decent triangle setup, but the ADX is too high. That's going to be interesting to look at. So let's clear all this stuff off. I'll show you what I'm talking about. You can see it right there, right? You can see the triangle. Look right there. So is this going to be when I turn the Elliott wave on? Is this going to be one of Elliott's? It's within a wave 3 or 4, and it is. So I had a suspicion that's what was going to happen here. So this is where, I've read everything that Elliott does, and Elliott has been on record by saying when you see a triangle, consolidating triangle in this scenario. Now remember, this wave 4 here, if you're new, doesn't mean we're in the wave 4. That is a forecasted price if we break down. So if the stock were to break down from here, there's where the wave 4 could possibly label. It doesn't mean it's saying, hey, we're starting the wave 4. That's not what it means. So if the stock continues to move to the upside, these target prices change. So just wanted you to be aware of that. So Elliott would look at this and say, okay, you have a triangle within the wave 3. The likelihood is you break out for the upside. And maybe we do. But what I've shared with our subscribers is from a trader standpoint, and my experience is that when you see one of these corrective triangles, and they are ascending, symmetrical, or descending triangles, in this case it's a symmetrical triangle, they can break either direction. I know Elliott says that the likelihood is to break to the upside. I have a hard time in a situation like this not protecting the downside and just going long. Now, the problem is when I normally set up a strangle for our subscribers with a triangle, it has a low ADX, meaning that the likelihood is it's about to break out. Look at what else is situated here. Look at this. That's a pretty decent gap there that hasn't been filled. We even have a gap down there that hasn't been filled yet. So yikes. To just go long this one, it may very well do that. It may very well take off and run long from here to the upside. But if I was going to send out an alert for our subscribers, I would be more interested in, let's see what we could do for a strangle here. And I'm just going to bring up, I'm curious, basically, because that does look good. And with that gap down below, a downside breakout would not be the end of the world. It's not very liquid. So we're just going to have to pass on this one. Like literally, it's not very liquid. There's almost no open interest in the options. If you go to June, there's some, but you have massive wide spreads, like a 245 bid to a 380 ask on a 15 delta. 34 delta is 840 ask, $11 bid. I'm just gonna have to let that one go. I'm gonna actually move that one over just as a watch list, just out of curiosity to see what happens. It's just not tradable, really, on BURL. So we're gonna let that one go. All right, so let's take the bullish wave 3 off. The last one was 5 below. So this one didn't register as being within a wave 3. It's not, it's in a wave 5. And let's take all this stuff off and take a look at the DMI. So here's one. Boy, that looks pretty interesting, doesn't it? Look at the separation that's occurring between the two directional indicators, and the ADX is creeping up, but it hasn't broken 20 yet. So this is a legit watch list trade here of, let's keep an eye on this one and see if that ADX does continue to the upside and break above 20. Then it triggers as a potential trade. We're at 197 now, could go to 235. So this is a watch list with a star on it, FIVE. So what I do is I star that. And if you're wondering if this is the first time you've watched me, I'm old school. I write stuff down. I write stuff down because it's a memory exercise for me. You know, if you go back to school, what were you taught to do? To remember things, you write it down. And so I have tons of stacks of notebooks, of yellow notebooks where I've written stuff down over time. And so I know people are more techie than me, and they create these really fancy Excel spreadsheets, et cetera, where they can track things and follow them. I just write stuff down. And so when I say I'm starring it, that means I'm literally writing it down and putting a little asterisk by it by hand. And then I'll make a note, watch for the ADX to move above 20. And that's how I do it. Just simple as that. So for me, I can write it down as fast as I can input it into a computer, but I know not everybody agrees with that, but I'm just an old school person when it comes to that. But boy, that could look really good if the ADX breaks up there. So we'll keep an eye on that one. And also, if you're noting this, boy, couldn't you see that there's a lot of resistance there at 200? Kind of a bit of an ascending triangle here as well, with that set of higher lows and the resistance there at 200. You could make a case for a strangle here, but I think just based on how great that DMI looks and the fact that the ADX is already heading towards 20, a little high for a strangle, but probably could still do one depending on where the options were. Let's see what the options look like on this one. But perhaps waiting for that ADX to break above 20 is a better, yeah, a lot more contracts here. So still some wide spreads, but there's plenty of open interest. So I think that when the market opens, those spreads will tighten. But that would be another very expensive strangle. So they're expecting this to move. There has to be some volatility priced in for those options are pretty expensive. So, and people always ask me, what do you mean by the options are expensive? Well, the IV is high, and I'm just used to where particular pricing on options around a 25 delta would be on all range of stock prices. I've just been doing it long enough to have an idea of where they are. But if you wanted to break it down mathematically, you could look and see that we have extended IV. While I'm talking about that, we're finishing up. In fact, tomorrow night's the last session on our Zigzag Mastery. We're doing a bonus session. And then in May, for our subscribers or anyone that would be interested in signing up and following along, we're going to do what we call Strangle Mastery. And it sounds like more talk on triangles. No, we're going to get into the options side of things. So we're going to get into the Greeks. We're going to talk about the Greeks and how options pricing works, so people can understand when stock goes up and the option price goes down, what's going on, why is that happening, things like that. So it's going to be heavily devoted to options pricing. So watch for that to come out sometime next month. We haven't announced the exact starting date yet, but it will be sometime in May. So we're excited to share that with our subscribers. So there we have the pre-computed for the impulse and the bullish. Now let's take a look at the momentum, and you can see, wow, several of them. Now I'm going to look at Century Casinos because that was on there yesterday too. So when there's one that's on, it's very rare for a stock to be on the momentum search 2 days in a row. Usually something happens to trigger it on the momentum search on a particular day. And even though the stock may continue in that direction, which we hope it does, it's rare for it to show up and be strong enough to be there 2 days in a row. So let's take a look. Just checking to see other ones. A lot of them that I'm not familiar with, that's fairly normal on this because these are lower dollar stocks. So you can see how we're building a move to the upside. CMI or CCI is up 2 days in a row. So is the ADX below the direction, the positive directional indicator. All that looks good. Let's look at the 10-day moving average. Not really overbought yet. One could say, hey, I'd like to be a bit more conservative and see it break above this level here at 12.5. I wouldn't fault somebody for wanting to be that conservative on this, but it really looks like this one wants to march to that 15 plus level right there at the wave 5, and maybe not in the too distant future with the way that, I mean, the CCI still has plenty of room, and the ADX has some room too. Man, that one looks good too. So SWK and then CNTY, that's going to be a tough one to beat. Let's go back and see Oxford Square Capital. Not familiar with this company at all. That's part of the reason, because it's a file or stock. So here we have the ADX outside the positive directional indicator. That's not my favorite scenario. Perhaps it goes up to 5.5 from here. It's at 5 now. It's not really interested in that one. So just move on to the next one. Titan International, symbol TWI. Looks far more interesting to me with, look at that. Set up here on this run, some resistance right here. We look at that again and say, hey, I want to break above that wave 3 high. So the target there would be 13.5. See what the options look like here. I mean, we had pretty good luck with the ones from last week. I mean, there's some liquidity. It's not tremendous, but the spreads are great. The spreads are not wide at all. Wow, that looks pretty good. And the ADX has broken them back above 20. Huh. So we'll make a note of this one too. Maybe we'll have 3 to look at this week. SWK, CNTY, and TWI. It's rare that we do 3. So Alta Equipment. ADX is outside, so I'm not interested in that one. MBI. Yeah, the ADX is outside the positive directional indicator there too, so that would need to change. LO at Loma. Oh, wow. Check that. I call that a double doji. I don't even know that. I'm not a big candlestick guy. I know some things about candlesticks, but I call that a double doji when the close yesterday and the open today and the close today were all the same. I know it's technically not a double doji. That's just my own way of viewing it, meaning that, man, there's a ton of indecision on this stock right there. This could explode higher from here, or it could tank to the downside. And you can see that we have a pretty good ascending triangle set up there with all those higher lows right there at resistance. Let's see what this one is, and then we'll move to questions. Loma. Well, not really strangle worthy. In fact, you can't create a strangle because on the put side, it's a 0 bid. But you could do our roughly 25 delta out to June, over 500 contracts, tight spread. So you could try something as far as a directional to the upside. It's a little more risky. So I'm actually going to put a question mark by that one. I'm not sure that one's official enough, but it's more of a curiosity. Maybe that moves to the watch list. So we'll say that our 3 official case study considerations for this week, because I think accountability is important, right? I mean, I can sit here and talk about charts all day long, and then we can come back and say, oh, well, I talked about that, and look what it did. Let's make a commitment. That's fair, right? You're spending your time watching this, and you're trying to learn, and we're trying to help. So I think we need to be kept accountable on this as well. So our official ones here are SWK, CNTY, and TWI. So those are going to be our 3 official ones. We'll keep an eye on FIVE and LOMA, more on just curiosity from a watch list educational type standpoint. But those are the 3, SWK, CNTY, TWI, for our official case study considerations. All right, so let's go to questions. Leon asks, if we get trade alerts, do we set our own profit targets, or will you tell us when to close? On the alert service, we send out alerts on, and that's a really good question, because I know there are alert services that send out only entries, and that's it. I don't know how you track accountability when you do that, but there's a lot of them out there. But we send out alerts on entries, any adjustments that we make. I'm going to make a lot of adjustments. Our subscribers will tell you that. Make a lot of adjustments. That's part of the reason that we've been as successful as we have. And then we do send out when we're exiting. Obviously, you're in control of your own account, and you can choose to make exits whenever you would like. But we will send out exits, and that's how we're accountable. When we close a position, it's reflected as the exit alert was sent out, official alert was sent out. That's when we closed it. So if you're looking for that kind of guidance, yes, we do that. So good question, Leon. Brian says, look at Target. Looks like a good trade. Let's take a look. We looked at this one not too far in the past, I don't think. Target, as I was joking. Well, it broke out. I can see why you're interested. It needed to break above 200, and it did. That's not the follow-through day we're looking for, but let's see. DMI doesn't look bad. Some room for it to continue to move from there. I think that what the market does from here will have an effect on that. It's really easy from a risk management standpoint. If you wanted to go long Target, 200 is your stop loss, right? If it breaks below 200, closes below it, look for the second day. Remember the confirmation day, then you get out. But you could go long there from here. Yeah, I see it is definitely just breaking above the 200 level. The ADX has room to run. Not a ton of room, but it still could go higher from here. So that's interesting because that's there, Burlington. So is there some retail stuff going on here as far as this entire sector? Jeremy wants to look at MA, MasterCard as far as a wave 5. Oh, wow. Perfect 50% wave 4 correction. That looks good. Boy, we were trading this back when it was in the mid 200s. So to see it all the way up at 360, that does look good. Jeremy, I can see why you like that. Now, for me, that ADX has to get in gear. It looks like it's trying. Looks like we're starting. I mean, we went through also those that have followed me for a while know that when we had this sideways consolidation here like that, I kind of call that the launch pad effect, where we tend to get blast offs from there. So you can consolidate in a very sideways manner for a while, then boom, quite often it will give you that blast off to the upside. It looks like it's trying to do that. A positive was that the low of the day closed the gap today, and we closed near the high of the day and closed above yesterday. All those are big positives. I would really like to see that ADX curl up a bit more and show some force behind it. There's plenty of room to go to 420 as the target. I would have a hard time entering it today, but it looks like it wants to go. I mean, it's a good looking setup and it looks like it wants to go. Let's go ahead and add that on our watch list side. See what happens to it. So that's just my personal opinion, is I would like to see a more supportive ADX. Jane, LITE, is that? Lumenum Holdings. Probably not pronouncing that correctly. So that has an 80% wave 4 correction, which means that is disqualified. So you have to take that off. Take that Elliott Wave Pattern off. It's disqualified. So we look at this as, it could be a big zigzag to the downside, actually. So let's see what the DMI is saying. Yeah, the ADX is diving. So it looks like something wants to happen. You can see from here, but it's not a qualified Elliott Wave pattern. That's a zigzag. I was looking to see if there's a smaller one within the A wave. There was one right here. So I know that's a tough one. If you want to trade it to the down, it looks like more of a downside trade than an upside trade right now. You know, things are always subject to change, but right now that's concerning. Jesse, welcome aboard. Jesse, here's what Jesse said. Just paid for EWO, can't wait. Do you guys have a training course? It's all on our website. You can go to the education tab. There's tons of education there, training. So welcome aboard. Glad to have you. And you'll find as much education as you care to go through there. Jane, on Apple, we're gonna hold that April call for now and see what happens tomorrow. That's kind of, Apple tends to move with the market a bit, and we'll see what this doji means. The futures have come back to zero, flat, so they were up 4.5 and they've come back. We may very well move to the downside. If so, we'll probably take the April call off, but we're going to wait and see, because there's a potential for the market to just run to the upside of there. Well, Pankaj wants to cover Apple, so let's take a look at it. So there's 2 questions in a row regarding Apple. You can see that we are breaking back to the upside. It looks good at this point. The positive directional indicator has crossed the negative. We need that ADX to turn and give some confirmation, but we had all this support right here, which held. So it held the support at 120, which it needed to, starting to move back to the upside. It's broken above all 3 major moving averages. The 10's about to cross the 30. It looks like almost all green lights for Apple. It's not all, though, because we need the ADX to turn up as well. But it looks like after a long consolidation on Apple around 120, it looks like it's turning and wanting to move to the upside. Apple will have a hard time moving up, however, if the market comes back and closes this gap. Doesn't mean it can't, but we'll see what happens out of it. But Apple could be a leader on the next leg higher based on where it's set. The way it's set up right now is that if we are going to run straight to 420, Apple could lead the way. Looks really, really good at this point in time. So FAST. Fastenal. Another one that I've traded in the past. Man, already you can see a couple things out of here. Hopefully you're starting to see these charts this way. Jesse, this is what we try to do, is the education here. You can see this really nice zigzag pattern to the upside here. And the only concern that I have right now is it's a little more vertical. I like this 45-degree angle move. I like them to go in that angle rather than more vertical, because those tend to, it takes a little longer to get there, but they tend to have less volatile corrections when they move in a 45-degree angle. Looking at the 10-day moving average, we're a tiny bit overbought here. So this one could run into resistance right here at these previous highs. And it kind of did today with this doji. Man, it just looks like the market wants to rest for a day or two. That's the way it feels right now. As I said in the intro, I hope not. I hope we run right to 420, because I think it'd be one of the greatest downside setups in a very long time. I don't know that we're going to get that, but it would be fantastic if it did. But the market just looks like it wants to rest a little bit. We'll see. Tomorrow will tell us the tale. We've got a ton of alerts ready to go. But how do you do that? How do you send out bullish alerts with that scenario? It's not prudent to do that. Let the market tell you what it's going to do from here. Let the 10-day moving average catch up. It was great to do it on Google because we had an out of the money butterfly, and time helps us. If we're not doing an out of the money butterfly, then you change your thought process. I hope that makes sense to people. Bitcoin. I'm going to do a market update this week, which we will include Bitcoin, but here it is. I mean, basically, Bitcoin's just nailed its Elliott Wave pattern. So we had this move here to 52,000, which we talked about in the YouTube SPY updates. So we nailed that, pulled back, went up, tested it again, moved up. The next level was 62,000, and we got almost there. Didn't quite hit it yet, but got above 60. We got a doji today. Bitcoin is just consolidating that big move, and that's a big move. Don't underestimate how big that move was, coming from 20,000 just in December to 60,000. That's a huge move. So it's going through some consolidation right now, but as far as the Elliott Wave pattern, it couldn't have been much more spot on. I mean, Elliott Wave nailed it. But we're just consolidating right now. Santino, was this an alert or case study on which one? Let me know the symbol and I'll answer the question. Steve wants to know how I got the out of the money target on Google. So if we go back to it right there, there's your wave 5 target. So it's at 2560. So I just rounded it down to 2500. So it's the wave 5 target. That's where it came from. Will Google come back and fill up that gap window? So the high there was 2135. The low was 2145. So there's a 10-point gap there. It may. It's fine with me if it does. Again, we have a May target, and the closer to May that it gets to the target, the more money we're going to make. So if it wanted to come close that gap, that's fine. It will eventually close that gap. Those of you that may be new may not have heard this statistic in a while, but someone heard me talk about how gaps get filled, and they actually went back and did an analysis. I think they went back 10 years, if I remember right, and came back and reported that 94% of gaps get filled. So it's not 100%, but I'm always saying gaps get filled. So it was like 94% of gaps get filled. So you can just say that it's extremely highly likely that gaps get filled. Now the question becomes on filling gaps is to when. Doesn't necessarily mean they get filled right away. Sometimes they do. Sometimes you get a gap up and it fills within a week or two. It gets filled right away. Sometimes it takes quite a while before they actually get filled, but usually they do. So will it come back and do that? The one thing I can tell you is it's overbought right now. There's too much separation between where Google's trading and the 10-day moving average. So one of two things will happen. Either Google moves back down towards this 10-day moving average, maybe filling that gap. I mean, that would be ideal. It fills that gap and then the 10-day moving average would catch up. Or it goes sideways and allows the 10-day moving average to catch up. One of those two things will happen, that I'm sure of. But as far as whether the gap gets filled right now or not, I don't know. I have a search that identifies triangles. Do I write down a trading journal? I actually do have. I have my rules that I have written down. Interesting question. I don't get that question very often, but I do have like the ones that you hear me talk about a lot. Gaps get filled, 10-day moving average, no security any time frame gets very far away from the 10-day move. I have my rules that I've kept track of over the years. I might publish that one day. But usually you hear me spouting them out. But yeah, I do have a bit of a trading journal per se where I keep track of those things. Why was the Apple trade so far out of the money? The out of the money butterfly. It's supposed to be that far out of the money. If it wasn't that far out of the money and it moved, it wouldn't work as well. So I mean, that kind of goes with how an out of the money butterfly works. You're setting it way out so that when it makes the directional move, you gain profit on the directional move. And if you can get it to the point where the stock actually gets within the wings of the butterfly, you make more money. If it hits the middle of the butterfly, you make even more money. If it gets within the wings of the butterfly near expiration, you make even more money. Those are all the different stages of how an out of the money butterfly makes money. But it's designed to be way out of the money, not necessarily that 25 to 30 delta that we talk about. Because remember, the key on an out of the money butterfly is lower risk, much higher potential reward. Couple more here, and then we'll wrap things up. Already over the hour. Can't believe the time goes so fast. Tan. It's a solar stock. Tan. So are these bulbs for tanning beds or something? Boy, look at that. Elliott would be screaming, this is going to go to the upside. That's what he'd be yelling. This is going higher. And I would be looking at where's the ADX, because I see the triangle and it's hard for me to just simply go live. I've done it before. Our subscribers know that I have followed Elliott's stuff. But again, so for those of you that may be new or not big followers of Elliott Wave, there's so much to Elliott Wave, so many rules. And basically he covered any sort of setup aspect that could occur. And our approach is, what we try to say is, we give our subscribers a trader's approach to Elliott Wave. So we don't cover all the obscure stuff that might show up 1 out of 100 or 1,000 times. Sure, it may be legitimate Elliott Wave, but it's going to show up so infrequently, it makes no sense to spend time learning it and looking for it when the big rules are the ones that show up more often, give you plenty of trading opportunities. So that's the scenario there. But from this, man, I'm going to put this one on our watch list just to see what happens here. That so looks like that wants to go to the upside along Elliott's path, but that is a really, really good symmetrical triangle. It's just well formed. I think if we use our Elliott Wave triangle tool here, yeah, look at that. So that's a nice looking triangle. Man, I would have a hard time not doing a strangle on that, but the ADX isn't low enough. Not super liquid here. Oh yeah, you go out to April, it is. That's so weird. So when I said go out to April, I was looking initially at the weekly, but the monthly, when you come down, tons of contracts way out of them. Wow, that is interesting. You go down into a very low delta and you get thousands of contracts. It's almost like somebody expects this to explode. A lot of people expect this to explode higher. They wouldn't be selling calls that low because there's not enough premium. So they're buying incredibly far out of the money calls. They must be looking for something major. And that is a rare thing. I don't see that very often. I mean, there are literally numerous strikes with like 1, 2, 3, 4 deltas with thousands of contracts. So it's just shot in the dark, expecting some sort of an astronomical move. Thanks for bringing that one up. That's quite interesting. So we'll see what happens with that one, but quite interesting. Walmart. So Walmart had that big move to the downside out of the triangle, which really surprised me, but this is why we stay within our rules. The triangle, and it just broke down. Hard to imagine in this market, in this environment, in this economy, Walmart breaking down like it did, but it did. Now we're at a 62% corrective move, and it's like, holy cow. Is Walmart going to break down into that wave 5? Boy, I would have a real hard time going long in this stock right now. It's at resistance. It's at a 61.8% fib level. It's going to have a hard time. It does have this gap to fill, and maybe it goes up and fills that gap. If you're bullish, that's what you're looking for. If you're bullish, you're like, we're going to come up and fill this gap. But the low there's 144. We close at one. It's only $4 higher. I would need to see this wave 5 pattern to the downside get disqualified to go long. If it closes that gap, that might disqualify it. So I couldn't go long Walmart until it broke above 145. So there's your target. To go long, it's got to break above 145. Up till that point, it looks more of a short than a long. And again, it's just hard to imagine Walmart breaking down to 120. So that may not happen. But just right now, today, I couldn't go long until we broke above 145. Break above 145, then it's a whole different chart. SWH, and that was on the search yesterday. So I wonder if, David, if you just brought that up, or if you're looking at the search. Interesting that you brought that up. So let's take a look at it. Look at that move. And so yesterday it was straight up, and today straight up again. It looks really good. So I'm wondering if you got that off the search or somewhere else. But yeah, I mean, I was looking at that yesterday. So you can see right there, we closed above it. Today was the confirmation. The only reason an alert didn't go out on that today is because of where the market is. Other than that, with the confirmation move to the upside today from what I was looking at yesterday, which is a break above the recent highs, it would have gone out. So we're tiny bit overbought from the 10-day moving average. We got the market. It looks like it might want to rest for a day or two, if not even pull back a bit. And then this looks great. So I'm totally with you on this one. So again, a good spot on it. It's a great looking chart. That's my thought process. That's the only reason it didn't go out as an alert to our subscribers today. Andrew asked about Apple again. We had already looked at it, but I'll go back one more time. Is it bearish after today? I don't see anything bearish about Apple. 120 held, 120 needs to hold. From looking at a bearish scenario on Apple, it would have to break below 120. Then it changes. But as we mentioned in the past, because we have our list, if the market were to break down, we have our list of stocks that we would like to go short on that have big, huge vacuum type gaps on where the market could go to the downside. Apple is not one of those. If 120 gets broken, there's resistance there, and there. It would be very hard to short Apple, even if it broke 120. But you can't short it until it breaks 120. So right now, with that little doji there, maybe it rests a day or two with a little bit of separation from the 10-day moving average and with the market. But no, I don't see anything short about Apple. And again, to reiterate, don't short Apple unless it breaks 120. That's the scenario. Thanks, everybody. Appreciate your attention as always. We value your time, as I know you do. It's the most valuable commodity that we all have. So thanks for your attention. If your question didn't get asked, apologize. There is a limited amount of time to get to as many of them as we can. Hopefully you'll join us again next week. Ask your question then. Until then, have a wonderful week. See you next week.